Well, for more analysis on some of these global risks, Managing Director and Co-Chief Investment Officer at Morphic Asset Management, Jack Lowenstein, joins me live from our Sydney CBD studio. Jack, thanks for joining us. Now, North Korea, I mean, you guys in markets sort of seem to think, oh, nothing much will happen. There's now another sort of escalation, but do you think it will lead to anything?
I don't. I first went to Seoul in 1990 to write for Euromoney about the possibility of Korean reunification. It was just after the Berlin Wall collapsed. And I came away from that trip completely convinced that nobody had any interest in it happening. And if everybody wanted the present tension to remain in place, that's, I say everybody, I mean China, Russia, North Korea, South Korea, Japan and the US.
So you're saying, sorry, you're saying that back then they wanted that sort of tension to stay in place. But this is more than just tension. And I mean, we've had that situation since 1999, and then occasionally, you know, there's a bit of an outburst of increase in that tension. Has it gone up sort of too many notches? I mean, even UN ambassador to the UN, Nikki Haley, said, you know, we can't keep kicking this down the road any further because there's no more road left.
Well, we just found some more road, didn't we? I mean, I think it's amazing how fast you can build diplomatic road because the can has just been kicked again. I think that the reality is that North Korea in particular, it likes attention, but it would hate a resolution. If it actually did anything that crossed some red line, which I think means an attack on any of either South Korea, Japan, or the US, it would lose its reason for existing. So I think it's highly unlikely to happen. Well, and I think the Chinese themselves, you know, they like having North Korea there because it keeps South Korea away from their borders, or what would be a united Korea away from their borders.
Yeah, and I suppose you would have to think that even Kim Jong-un would have to calculate that his country would be decimated if he did that, because the US presumably would retaliate.
Absolutely, and he may not care about his country, but he certainly cares about his family.
So, I mean, how do you see these markets going? I mean, not to jump away necessarily from North Korea, but the equities markets just keep climbing in the United States.
Well, last night we saw an intraday high on the S&P, and I think the S&P futures have been flirting with new highs on and off all day. We feel that we've still got a reasonable prospect for new highs to be seen repeatedly over the rest of this calendar year. Obviously, the key determinant in how long this bull run goes on for is monetary policy, as we said to you before. That's our view, and we're going to see a very major event next week when the US Federal Reserve we think pretty sure is going to announce that it's going to start to shrink its balance sheet for the first time since the GFC. But the markets know that, and they're not worried.
Yeah, no, it's interesting. Before we get on to the Fed, I just want to go back to sort of this idea about, you know, sanctions being imposed on North Korea. I mean, China and Russia certainly last week were talking, you know, calm down, diplomacy is the best way to do it. Are you saying it's in their interest to keep North Korea, certainly in China's interest, to keep it in their tent?
I think it is. I think China is not ready for a confrontation with the US. It would like to see it contained and distracted, but it's not ready for a confrontation. From an investment point of view, it's very hard to make rational investment decisions from discontinuous events. So the best that you can do is assume they don't happen. Obviously, at some point, the inconceivable becomes the inevitable, but we're not there yet.
All right, but we may be at a point where there may be a kind of an escalated trade war between the United States and China. Certainly Donald Trump campaigned on it during the election campaign for different reasons, but now he may have an excuse.
Yes, but I think it's an excuse he doesn't want to take. I think, you know, U.S. trade exists because both nations benefit, and in our view, both, you know, even Donald Trump recognises that issue, and certainly his colleagues in cabinet do.
All right, well, let's go back to the Fed now. So you think they will announce this? I mean, we had been sort of thinking it was coming for quite some time. They haven't pushed forward with it. Why do you think next week?
Look, I think that all the, you know, typically when the Fed does something, it's the various governors make speeches in advance that speak about what they are likely to do and discuss why they would do it. And I think it's got to the point now where it will be almost embarrassing for them not to do it. And that's typically where things happen. The Fed doesn't like to surprise us, but it also doesn't like to surprise us by not doing things.
But it does seem to, do you think, I mean, they will keep quite a bit of the liquidity. Are they dependent on it? Do they like it?
I think they found it a useful tool. In any case, it will take a very long time to run down the balance sheet. It took many years to build it up, and they're not going to run it down any faster than they build it up, probably a bit more slowly. So the issue of what the eventual normal balance sheet will be probably won't be known for at least another couple of years. Yeah,
so what did they run it from? What was it, say, a decade ago before the GFC, and what is it now?
Now, you've got me slightly here. My recollection is it went up from about 700 billion to about 3 to 5 fold. Sorry, I should have that data in front of me. I know, but it's a huge amount. And so running a gentle runoff will be quite a task, and especially because it's not all treasury bonds. Some of it is mortgage-backed bonds, and they're going to be harder to sell into the market.
All right. So are you liking? Sorry, go on.
So I should say, or just not reinvest, which is the majority of the shrinkage of the balance sheet will come from not reinvesting maturing issues.
Okay, how does that sort of skew your view as an investor? Are you in the United States markets?
We are. We're still underweight the US, which has been fortunate because obviously the US dollar has been very weak. We are overweight emerging markets, including, I should say, Korea, where we've actually bought more during the flashpoint the last few weeks.
All right, so you're still very bullish about Asian markets and particularly Korea?
Korea, we've got a significant overweight, but in one stock, Samsung Electronics, which was one of our largest holdings.
All right, so the recent scandal there doesn't weigh on you?
Not really. I think it's not as though people didn't know what was going on, and the fact that that the deputy chairman has been put into jail, well, he's been in jail for a while, but has now been sentenced to 5 years in jail, is really nothing very new. In fact, you could argue it was a positive sign.
Yeah. So in terms of a market in the world that you think still has a lot to go in the next year, that you are perhaps backing or betting on, what would that be?
We've been buying more in mid-cap stocks in Japan, principally in two areas: construction-related stocks, where we think they're very, very cheap, and we're buying stocks on P's of 6 with huge amounts of cash on their balance sheet. That's how cheap they are. And we're also buying stocks in high growth areas in various internet-related businesses.
All right, Jack Lowenstein from Morphic Asset Management. Great to talk to you. Thank you.
It's been good to be here.